facilities of the banking system, involving structured engagements with relevant stakeholders and authorities in order to mitigate credit risks and ultimately open up the credit delivery space in the Nigerian economy. The committee extended warm felicitations in an expression of gratitude to the President and Commander-in-Chief of the Armed Forces of the Federal Republic of Nigeria, President Muhammadu Buhari, and the Senate of the Federal Republic, respectively, for the reappointment and prompt confirmation of the Governor of the Central Bank of Nigeria, Godwin Emefiele, for a second 5-year term in office. In particular, the committee noted that the reappointment was in recognition of the contributions of the Central Bank of Nigeria to maintaining macroeconomic stability, and it would engender confidence and build policy credibility and deliver stability to the Nigerian financial markets. In view of the abundant opportunities available to banks for unfettered access to government securities, which tend to crowd out private sector lending, the committee called on management to provide a mechanism for limiting deposit money banks' access to government securities so as to redirect banks' lending focus to the private sector, noting that this would spur the badly needed growth in the Nigerian economy. It called on the government to use all machinery at its disposal to increase tax revenue to enable the government fund its budget adequately. Committee's decision. The global and domestic developments have conditioned an environment of low optimism in the macroeconomic and financial sector environments, forcing central banks to return to accommodative monetary policy. As in the past, the committee considered the options of whether to be more accommodative, tighten, or hold its position. The committee felt that although the slight inflation uptick should result in tightening, it nevertheless felt that doing this will limit the ability of deposit money banks to increase credit at this time, given the need to support or redirect the focus of the deposit money banks to new credits in support of consumer, mortgage, and other priority sectors of the economy, including the SMEs, agric, and manufacturing. It also felt that given the fragile state of the economy, increasing the cost of credit will further diminish investment flow and impact negatively on output growth. As regards loosening, some members felt that it was desirable to aggressively stimulate growth, restart the capital market activities, and increase lending at lower rates, which would ultimately stimulate domestic aggregate demand. Those against loosening felt that given that there was a marginal increase in headline inflation for April 2019, there is need to restrain from loosening in order not to exacerbate inflationary pressures. They also felt the economy would experience liquidity surfeit and without corresponding increase in real sector output, inflationary pressures could be elevated, resulting in likely exchange rate pressures. As for members who favored a hold position, maintaining monetary policy rate at its present level was essential for better understanding of the momentum of growth before determining any possible modifications. They also felt that retaining the current policy stance provides an avenue for evaluating the impact of the bank's intervention policies to support lending to the priority sectors of the economy. Consequently, the MPC decided against the backdrop of these developments by a vote of 9 members out of 11 to hold all parameters of monetary policy constant. 2 members voted, however, to reduce the monetary policy rate by 25 basis points. In summary, the MPC voted 1, to retain MPR at 13.5%, 2, retain a symmetric corridor of plus 200 and minus 500 basis points around the MPR, 3, retain CRR at 22.5%, and 4, retain the liquidity ratio at 30%. I thank you for listening.
Distinguished ladies and gentlemen, that was the communique of the MPC, communique 124 of the MPC, as read by the chairman of MPC and the governor of the Central Bank of Nigeria. If there are questions, this is the time to ask them. But I want to appeal once again that we must be in strict compliance with the rule that we have in this House, that only specific items mentioned in the communique can attract questions here. This is not a general press conference. Please, if you have any questions, if there is one at all, you can just walk up to this place and tell us your name and then ask one question, please. Okay, just one question, that's good.
Good afternoon. My name is Obi Nachima. This is the newspaper. Governor, you talked about the need for a fiscal policy. You talked about in your projection, you said there's need for the ERGP to be sustained. And in the next few days, we know the cabinet will be dissolved. If you are to advise the president as one of his advisors, how soon will you advise them to constitute a new cabinet, considering the fact that whatever you do from the monetary policy side needs the complementary push from the fiscal authorities? Thank you.
Chief Mrs. Nancy Ilu Naji.
Thank you, Mr. Isaac. Good afternoon, Governor. Taking a cue from what you said, I would like to know specifically what you mean when you said that the MPC is signaling to the banks against government securities, because we know what happens when a lot of them now go to buy treasury bills and all of that, discouraging credit delivery system. Then you also talked about your MPC is considering a proposal to speed up the recovery of loans. I would like to understand that further. Thank you.
Thank you.
Okay. Governor, good afternoon. Congratulations on your second term. You said the MPL is beyond the prudential level in the economy. How bad is the MPLs?
Or how good?
Good afternoon, Governor. We hear much from Business Day. Okay, Governor, in your speech, you did mention, or you again called on the government to build buffers, but this time around you're asking them to do this through what you call realizable budget benchmark. Just wanted to know what realistic budget benchmark. Just wanted to know in your sense, what a realistic budget benchmark should be at this time, considering the outlook and risk.
Thank you. Governor, sir.
Current benchmark, do you have it? Yeah, for budget. Well, thank you very much. First, before I begin to make comments or respond to these questions, I think it's very important that I seize the opportunity to thank Nigerians, particularly members of the press, for their support in the last 4 or 5 years. Your support has been extremely immeasurable. If you recall that the latter part of 2015 into 2016 and 17 were very difficult for the Nigerian economy, and by extension, the monetary policy authorities, and the fact that you have shown a lot of faith, giving us the chance, showing understanding in the way that we have approached monetary policy direction for the country, we say thank you so much for all this. We would continue to crave your support, your understanding, like you have done in the past. Yes, at this time, we've seen what we can call a relative improvement in macroeconomic variables in Nigeria, exchange rate being stable, reserves looking good, inflation moderating downwards. But it's also important for me to say that there are still challenges ahead. If we consider that notwithstanding the improvement in macroeconomic variables, that inflation still has its own pressures arising for issues bordering on prices and supply shortages for food, issues bordering on unemployment, and the need for us to think about how to diversify our economy. I would say the challenges ahead are still enormous, but we will need your support. In this next phase, there will be a need for us to aggressively be thinking about how do we improve the level of employment and reduce unemployment in the country. I must confess that yes, there is a relationship between employment level, an improved economy, and the level of security in the country. So we all have to work together. Those who are making life difficult for people to go to their farms, to be able to produce or to conduct their farming activities, we seize the opportunity to please appeal to them, to please allow our farmers, particularly in the food producing belts in the country who are currently affected, to please allow these farmers to go to farms. When people go to farm, they get employed because they can sell their farm produce, they can feed their family and employ other people, and when they do so, ultimately reduces the level of insecurity in our country. A lot of work needs to be done. We need to consolidate on the growth that we have right now that is fragile. The economy growing at 2% is suboptimal if we consider the fact that this country's population grows at an average of about 2.7% per annum, and the fact that, and you may have heard me recently talking about the fact that it is saddening that Nigeria will be the third largest populated country in the world in 2050, even higher than America, but following India and China, or China and India. It's not a good story. But what it also means is that we have a lot of work to do to be able to feed and provide food, to be able to employ the mass of people that will be created, as it were. Now, responding specifically to questions that have been asked, that there is a need that in the report that I said that there is a need for the Economic Recovery and Growth Plan to be sustained, and that I should advise Mr. President about expediting the reconstitution of the Executive Council. Well, it's important for me to say that here, the decision to reconstitute or appoint ministers, I must confess I don't have all the details, but I do know that it's not an easy one, given the fact that the president must go through finding suitable and hardworking people that can...
The governor of the Central Bank, Godwin Emefiele, and the chairman of the Monetary Policy Committee of Nigeria, taking some questions there after that press briefing of the communique of the two-day meeting that just ended. I will thank our viewers here in Nigeria and around the world. So we want to get back into this conversation with our guests in the studio before the top of the hour. So let's bring everyone back on stream. The Director General of the Manufacturers Association of Nigeria, Jay Carter, is in the studio. Thank you so much for being with us since 1:30. Also, Jay, thank you so much as well.
Thank you.
Who is the senior banking analyst at Meristem Securities, and also from the stock exchange, head of research, at FSL Securities, Victor Chiazo. Thank you so much. And of course, we'll get to Professor Uche Waleke, who is Chief Economist at the SEC, also from our Abuja studios. But gentlemen, let's take this straight, and we're going to start with you from the manufacturing sector. I'm sure you listened to that. What is in that for you? Is it the improved credit access? I'm sure you like that. And of course, if everything go well, then we'll be able to have a growth that will help create more jobs.
Yes, I think that is true. MPR is retained at 13.5%. And I was looking for a downward review, like I said, so I think I am a bit disappointed in that. So I joined the two other members who asked for a further reduction by 0.25%. So I'm the third one, even though I'm not a member of that committee. But certainly, I think one is relieved by the fact that he has indicated that the crowding out of the private sector should be reduced, which means that they are going to restrict the borrowing, government borrowing. And I think that is good. He has given indication that the central bank will be focused on reflating the economy, putting more money in the hands of consumers to buy products, especially those made in Nigeria, because we have indicated that for us, the high level of unplanned inventory is actually becoming a major issue. Even though the PMI continues to give the impression that production is going on, we have access to foreign, but after producing, you are not able to sell.
Well, one other thing that the committee told the central bank to do is to go after the bad debtors in the banking industry. I'm sure that will also be good news for you, because these folks took billions and billions of naira. Those of you who are industrialists are getting the short end of the carrot. If you get the carrot, any of the carrot at all, maybe you get the stick more than the carrot.
Yes. Yes.
So this is good news for you. You
yes.
like that?
Yes, we like that.
I think everybody will like that. But of course, we'll stand by, everyone, for just 2 minutes. We'll take a quick break. We'll be right back. So let's go on the final lap of these very panel discussions on today's Monetary Policy Committee Decision Day. Nigeria's 2.01% GDP growth in first quarter of this year has been described by the Central Bank Governor Godwin Emefiele as very fragile and not enough based on the country's population growth. Of course, that's already on the street. Meantime, the members voted 9-2 to hold all interest rate, all rate parameters unchanged. So let's take a bit off the financial monetary policy side of it to some of our panelists here. Osi Ajayi, thank you so much for Meristem Securities. This is taking it straight to your market street when the policy members told the central bank management to work on government securities, crowding out the private sector. It looks like this is hitting home. Emefiele sitting down there, other members telling him, and the rest of his deputy governors, and said, look, you need to do something about this. The price of keeping of what you call making money from trading securities. That's your fixed income market.
So really, there have been several calls for it over the years, particularly in 2016, 2017, when rates were really high up there, and then there were several calls, to limit the banks, tapping into that market. And then now it seems like, it's coming to fall. But then again, we've seen loans decline consistently over the last couple of quarters, and then it seems like banks aren't extending, credit to the private sector. Rather, they're chasing, their high MPRs. They're trying to bring those ratios down to reasonable levels because of the effect these high MPRs have, not just on their books, but on their share prices, and then how people view the efficiency of their operations. But now the call is coming to fall. We're going to, we're eager to see, what measures the government is going to put in place to ensure, that there is a cap, or to place a cap on the level of deposits, that these banks can deploy into investing into fixed income trading. We're going to see what that is going to be like. But like I mentioned earlier, you still can't force these banks, to provide loans to the public, because largely they have high NPLs to deal with. They don't want to deal with high risk individuals where, because the government has said we should create loans, we're creating loans now, but our NPL is suffering. And then with the implementation of IFRS 9, and then these banks have to take provision upon creation of these loans, we just might see an uptick in impairment charges, surging NPL ratios, and then that's not very delicate. It's a very delicate. Yeah.
Let's ask Victor Chiazo of FSL Securities at the Stock Exchange. Victor, the part of the MPC communicates that says there's a need to also grow the capital market. This is again coming from the central bank, looking at how sharply down, as we speak today, well, over the last, perhaps before the MTN listing of last Thursday, the Nigerian stock market is the worst in Africa, 7.1%. Uganda and a few others Kenya are doing a little bit better than us. So this is taking the whole thing, looking at how the equities market has been and why it is important to get the stock market in the game and get investors back there. The governor says, look, we've seen so much foreign portfolio inflows. They're going into the fixed income. They're going to currencies, coming to the stock market. Where you are, it hasn't been happening.
Yeah, Boston, the CBN governor at this point, I think, really needs to take a decision and pick. We all know that if there was a choice between fighting inflation and GDP growth, clearly the CBN stance would be to fight inflation. And we've seen inflation take a bit of an uptick, the last figure moving from 11.25 to 11.37. So we know that their stance would be to fight inflation. But with regards to its announcement about growing the capital market, it's a bit tricky, because if we have seen a lot of inflows over the last quarter, and yet the capital market remains bearish, it shows you that most of these inflows have actually gone straight to the fixed income space. And with their current stance on living interest MPR at 13.5, it doesn't really do so much to the equities market, because the truth remains that once returns on investment from the fixed income space is clearly above inflation, without any risk, most funds will actually head towards that direction. Until that trend is reversed, the equities market might continue to suffer reduced inflow, and we might continue to see the market suffer in the long term. But with respect to his communique, I think I would like to see how his plan to actually reduce or limit the bank's investment in the fixed income space. For me, I think that might actually boost flow to the real sector of the economy. They will be forced to lend. But the question is, will it be able to cap the rates? Would it actually make the banks lend to the real sector at a reduced rate? Because now they won't be able to invest those funds in the fixed income space. But yes, it doesn't tell them at what rate they must lend to the real sector of the economy. So funding for the real sector, they may get the funding they need, but they might not get it at the rate that might actually be good for their businesses. So the businesses in the long term might actually suffer, and you might actually see MPLs for the banks rise if that is not taken care of, especially with this IFRS 9 implementation, where you need to project expected credit loss on your balance sheet. I think Victor, it's a bit. I think the CBN is between the rock and a hard place.
Very. Yes. Well, that's where the central bank is, and I think that's where every one of us is, because that's our bank. So whatever happens in there is for the 200 odd millions of us. But thank you, Victor. I think we'll be wrapping up, gentlemen. Let's give Professor Uche Waleke, the chief economist at the SEC at Abuja Studios, about 60 seconds or less to give us his thoughts about these decisions. Professor Waleke, please.
Yeah, thank you very much. I'm happy that the central bank is beginning to be concerned about what also happens in the stock market. It's not for nothing that Forbes included stock market performance at one time as one of the indicators of ease of doing business. If the stock market is doing well, of course, you will expect that a number of companies would be incentivized to even get listed on the stock exchange. Now, having said that, I want you to notice something in this communique. The central bank governor has the central bank, as a matter of fact, has revised their projections. Central bank has revised these projections for 2019 with respect to GDP growth from 2.7% as at March communique to 2.38%. So what that means is that in the next 3 meetings they're going to have, July, September, November, I predict that it's going to be there's going to be a ride, down the lane, such that by November the MPR may be finishing at around 12%. And what is informing this? The CBN governor mentioned, number one, the fact that monetary aggregates are underperforming. Take M2, for example, the broad money supply, analyzed at 5%, to 5%, whereas indicative benchmark was 12%. The same for M1, which was even negative, and then M3. So if you look at that, and you also look at what you also mentioned, the actual output is far, far below potential output. And the fact that the inflation tool that even went up was anticipated. And
okay, Professor
downside risk to inflation, which he didn't mention the issue of fuel subsidy or the issue of electricity.
Comments and everyone, we appreciate your time. We need to wrap up this panel. Thank you so much, gentlemen. Osi Ajayi from Meristem Securities, Director General of MAN. Thank you so much for being here. And of course, Victor Chazo from FSL Securities at the Nigerian Stock Exchange. Thank you, everyone. Let's keep the conversation going on social media at Channels TV. I am Bosin Namavaye, and I'll see you next time.